Hello and welcome everyone to today's session. My name is Mohammed Shanti and I am a market analyst at EGM Securities and FX Beza. And in today's session, we'll be talking about the US market open. And there are many things happened today, and let's get started. In today's session, we started by before talking about today's session. Today, the US market open. I need to remind you that every information that we provide here are for educational purposes. We do not give recommendation or any signals in particular. We don't give investment decisions, and all your trading decisions should be based on your research and based on your analysis. Going through what happened today in the markets, the World Bank lowered its forecast for global growth from 4.1% to 3.2%. The downgrade comes amid concerns about rising inflation. This is the main theme in the past year, and even in today's year. Also, we have the Ukrainian-Russian war. Also, the inflation going higher. Interest rates are being pushed around the globe, and now the ongoing war in Ukraine, things are being stopped. Basically, the European stocks, US stocks, gold, and even oil, and the US dollar, all of them are moving in a volatile movement, and hence many trading opportunities available. So speaking of the dollar in particular, it's very apparent that the Federal Reserve, which is the US central bank, is unpacking one of the most aggressive policy tightening scheduled to tackle inflation. So the inflation has been running fast, literally in a very fast pace, almost to near 40 years high, and therefore we are seeing the US government are trying to, the US central bank or the federal bank is trying to cool the overheating economy. So many analysts, many economists are expecting a double rate hike. So interest rates could actually go as high as 3% by the end of next year, in order to cover up the wobbles from the US housing market, and also in terms of sales and new builds, especially if the wages are unable to keep up. So in order to tackle the heated economy, or to tackle the inflation, the Fed could possibly be more aggressive to tackle these elevated levels of inflation. Basically, in the housing market today, we saw that the early signs of pressure came from the housing market, with the 30-year fixed mortgages rate at 5.10%. This level's last seen around November 2018. So concerns are now growing in first time for buyers of single family houses in the United States, and the surge in mortgages rates are a bit concerned. So the troubled supply chains are adding to the elevated house costs, and it's making it even less affordable to buy a home. So basically, the production is taking a hit due to the shortages and higher costs in building materials like lumber. So basically, because of the inflation, higher mortgage rates, and basically people wouldn't be able to buy houses in the future. That's why this could actually lead to a recession later on. That's why we could see the Fed pushing interest rates higher and higher. Now, what does that do to our financial markets? How does this kind of analysis help us understand and making a trading position, basically? So if you look at the USD JPY, for instance, so the Japanese central bank is completely the opposite. They are actually being super loose in their monetary policy. Basically, they're not tackling. Basically, they have low inflation rates, and that's why they're not pushing interest rate higher. This has led to a divergence between the US bond yields and the Japanese bond yields. Now, higher bond yields meaning more demand on the US dollar compared to the yen, and that's why we're seeing very strong US dollar while a very weak yen. This is why we saw the USD JPY hit a 20-year high. So due to this perception, there is a growing gap between the Federal Reserve policy and that of the Bank of Japan. This has definitely led to a rally to the upside in the daily for our chart. That means if this kind of policy continues, we could see prices continue to go higher and higher. That means I need to find a really good place to buy the USD JPY, for instance. Now, the moment they change this kind of policy, the Bank of Japan, if they decided to change their policy, we could see prices go lower. But until that happens, the current situation is that the Federal Reserve policy is definitely aggressive, and there will be a gap between them and the Bank of Japan. Hence, higher interest rates on the US dollar, lower interest rates on the yen, making the dollar more appealing, and therefore the dollar could be dominating the yen in the coming months. Speaking of the treasury yields, so basically the 10-year treasury yield for the US is currently at 2.9%, while the 5-year treasury yield is at 2.84%. Also, we have the 2-year bond yields are at 2.52%. So this is one of the reasons why the dollar index is steadier around the 101 mark, elevated by these rank. Underpinned by these elevated rates. So we could also see that the euro and the pound could remain heavy, holding below the 1.8, 1.08, 1.08, and even for the pound, it could be near the 1.3 mark. So if the current situation continues, the dollar could dominate, and therefore we could try to find opportunities around the US dollar to buy the US dollar in general. Speaking of the strong dollar and its effect on the precious metal gold, now we saw in the past, in this week in particular, gold reached 6-week high near the 1998 mark, and then pulled back really heavily in today's session. We saw it reach the 1957, almost a $30 drop. This is because of the strong US dollar. You can also see that on silver also. You can see prices went down as we speak. And I'm going to show you on the MT4. This is going to be a very practical session. Basically, I'm going to show you the MT4 now. I'm going to give you technical perspective for each of these items. But we need to cover the fundamental side first. The second, one last thing I want to talk about is that the current movement in oil also is definitely affected by two things, which is the war on Ukraine and Russia, and how it's going to affect the supply side. So tight supplies usually push prices higher. However, the latest lockdowns in China also affect the demand side on oil. So basically, lower demand push prices down, while lower supply push also prices higher. So the difference today was the outlook from the World Bank. So the latest outlook from them definitely, which is the growth from 4.1 to 3.2, definitely affect the energy market. So going to the MT4 now, I'm gonna give you some technical perspective on each item there is available. So basically, starting with the precious metal. So prices, as you can see, this is the 1-hour time frame, and currently the precious metal is standing at the 1961, all the way down from the highs of 1998. So let me put some numbers here so you can see how the movement actually went. And let's put some arrows. So basically, this is the 1998, right? And as you can see, there was a bullish channel happening in the precious metal, but these candles now confirm that this channel has ended. So basically, a new downtrend could happen. However, we have a huge support levels we need to be aware of. So basically, we need to look at the first, one of the most important support levels that we need to look for, which is the 1940, or even before that, we have these two highs almost to 1945. So this area is very crucial, by the way. So we saw some movement around here. a pullback, definitely a big pullback from this area and another pullback from this area. So this previous resistance became now a new support level. So this is the main levels that the bears are looking for now. They're trying to push prices all the way down to this level. However, we could see some minor pullbacks happening here, depending on the recent on the latest resistance, latest support over here, which is the 1960. Now, a defeat of the 1960 could push prices to the main, to test the main support level of 1945 and 1940. So this area is very crucial. Now we could see prices tend to go down and up, down and up. Therefore, be careful from the range trading in the precious metal. Now, from technical perspective, from the technical indicators, now you can see that there is now the MACD confirmed that there could be a bearish crossover happened over here. We saw prices went down. Right now, it is confirming to us again there is a bearish crossover to the downside, just at this candle exactly, that there is a continuation to the downside. This is confirmed by the RSI, and as you can see, the RSI is almost near the 30 mark, which is an oversold territory. As long as prices continue to the downside, we could see the oversold territory happen, and then we could see prices go down a little bit, and then prices pull back again. Now, this is very crucial for many traders. So a lot of traders could bet on prices to go back inside the channel. So they're waiting for the RSI to confirm it. Some other traders actually waiting for the minor pullback happening, so they can enter from here to do the sell. So this area is very crucial to decide where prices might go in the coming days. So be careful of trading gold in the coming sessions. Especially put your stop losses. If you're going long, please put your stop loss below the 1945 area at least. And also for the going short, at least your stop loss should be near this area, which is the 1982, which is the latest today's high. So we can see, look at over here, this is the high that we saw. This is the daily chart, 1981. So this is the high the latest high that was reached today. So basically my stop loss should be around here if I'm going to push for a sell. So be careful trading the precious metal today. And continuing to the US dollar, with the US dollar. So as I mentioned, that the euro and the US dollar, the pound could be seeing some bearish pressure because of the strong US dollar. However, the latest ECB interest rate decision to hold their rates as they are, even though they promised for faster tightening policy in the coming future, has actually led the euro dollar to stay within a narrow range. This narrow range is currently standing between these two levels. First of all, which is the one spot or 832, and the other one is here, is near this area, which is 1 spot or 768. So range trading happening. Basically, I would rather wait for my moving averages to confirm when to enter. So whenever prices go above my moving average, I enter here and target this level, which is the one spot or 830. If I saw my prices go below the moving average, I take a trade and push for the one spot or 768. Always try to get out before even reaching these two support, or the support and resistance, because you could never tell, prices could continue to their downside. So I'm more biased to the downside. So if I took a buy, for instance, here, I would definitely aim to this area only for like 20 to 30 pips, no more. But from the downside, if prices went down, I would keep my trade, all right, because there's a chance prices could continue to the downside. So more bearish sentiment rather than bullish, but still narrow range trading happening, more likely bias to the downside. As for the British pound against the US dollar, we are seeing a bearish momentum to the downside happening, confirmed by both the RSI and also by the MACD. MACD has been in the negative territory since the 14th of April, and now it's continuing to do so, and we're seeing so many crossover to the upside. That means we could see some little bit of a movement happening. This was confirmed before. You can see prices from here and this area over here, prices already traded within a narrow range, and then there was a huge break to the upside, and then a faster pullback. So this is a very crucial area now. We could see prices actually retrace again from this area to the upside. So similar story to the euro, but more let's say risk averse a little bit from the pound, because the pound, the English central bank, or the Bank of England, actually they are pushing they are actually doing tight monetary policy at the moment, and the only difference is that the dollar is more desirable. That's why we're seeing some bearish movement. That's why you could see some downside happening to near the 1.30, and then going back again to the 1.35 and 30.52, and then again to the levels of 1.3144. Now, as long as prices are below this level over here, the narrow range trading could continue. So be careful trading the pound also. I would rather go to the euro rather than the pound at the moment, because of the tight monetary policy compared, like the ECB is not as tight as Bank of England. However, the Fed is definitely more aggressive out of these three. Going for the dollar yen. So the dollar yen is literally going higher and higher as we speak. You can see this bullish uptrend happening. This happened the moment they decided from early March. The moment they decided, the Fed decided to push interest rates higher and higher, we could see the difference. You could see prices going higher, and as you can see, prices are even way past the moving averages. Also the MACD, both of them are both lines are going higher and higher, while the RSI is in the overbought territory, but not yet went out. So this could continue as long as the monetary policy divergence between the Fed and the Bank of Japan. So what should I do if I want to trade the yen in particular? So there is one level that I need you to have a look for, which is this level, which is this moving average, 127.90. If prices retraced back to this area, it could give us an indication that maybe prices could range now, but it really depends. Once you see prices return, you can actually take a bullish trade. However, I need to aim to the levels of 129 as my main target. Now, how does this uptrend ends? Basically, these two levels must be defeated first. So going for the first level, which is the 126, and this bullish uptrend, so prices could reach the moving average 127.28, the second one, and the next this area 126.40. So prices must defeat the 126.50, this range over here, in order to see an end to the latest uptrend that happened. So from this area over here is very crucial. We could see a lot of movement around this area. So be careful trading also the yen, especially if you are taking a trade from the highs over here. Now, the more you take a trade from an uptrend at a really high point, there is a downside could happen. So be careful with your stop losses and your lot sizes for the dollar yen. Talking about the Dow Jones. Now, the Dow Jones has been seeing some up and down movement. Basically, this is represented by the 1 hour chart. You can see there is multiple highs happening. There's 1, 2, 3, and also we are seeing multiple lows, 1, 2, 3, and almost this area. So basically a narrow range happening now. The main reason why this is going good, because of the earning reports from several financial services or banks from the US. They came better than expected. However, the downside is still there because of the higher interest rates. Higher interest rates means a lot of traders or a lot of investors go to the safe trades, basically, such as the bonds. They go purchase bonds because of the bond yields, and it's much safer. That's why it's less desired compared to the bonds now. But still, the better than expected performance of the earning reports from several major banks in the US gives us a hint that the US economy might actually turn good in the coming 2 years. But still, they need to tackle inflation. It's very important. Now, as I mentioned, the housing a problem that the US could face could actually affect the Dow Jones lower and lower. So as long as inflation remain elevated, you could see the Dow Jones in a narrow range, but more biased to the downside, right? So we are seeing this bearish downtrend got crossed. Be careful of a test. So if we saw in the next 2 hours a pullback to the downside, we could see prices reach this area and continue to the upside. Or that's why if I want to take a trade from this area, I would definitely put my stop loss somewhere here. So 34,270 mark. While if I want to take a trade to the downside, I would definitely put my stop loss above this high over here. So 34,900. So expect prices to reach this area and this area. So these support levels and resistance are very crucial for the Dow Jones and for the stocks traders. So going lastly for oil prices have been seeing some volatile movement. We saw prices reach all the way to these highs. So 109 mark, almost 109 mark, but it went back again and currently standing at the 102. Now, as long as prices are above the 100 mark, bullish sentiment remains, especially with the latest Ukraine-Russian war, because there are still fears that forcing some bans on the Russian exports or Russian oil will definitely boost prices higher and higher. Now, however, the IMF or the World Bank latest outlook kind of hurted the oil, but still we are seeing this is a normal pullback happening for the latest uptrend. So prices must go all the way below the 100 mark in order to see an end to this uptrend, and we could see prices all the way back to the levels of 92 mark. Now, the bullish sentiment in general, if you look at the 4-hour chart, so it happened from this area now. Now, this crucial area, which is a support level for oil prices. Now, the oil prices must go all the way down below this to confirm a new downtrend. Other than that, the bullish sentiment remains. That's why we could see a lot of traders take a trade from this area near the 100 mark, or even below from the 95 mark or even 96 mark. So it really depends on your risk profile here. As long as the Russian-Ukraine tensions are there, that means anything could happen with oil prices, especially OPEC just mentioned that they might not be able to cover the losses, or let's say the export for the Russian exports of oil if they got banned. Therefore, if OPEC won't be able to cover for these oil supplies, that means the supply will definitely get tight, and we will see prices higher and higher, and we could see prices reach all the way to the levels of 126 again. I want to thank you so much for coming to this session. If you have any question or any information you want, please contact us via our social media channels. We will gladly answer any question that you want. Thank you so much for joining me today. Please tune in for next live session, available every day, and hopefully I'm gonna see you again next week. Thank you so much.